A self-managed super fund, or SMSF, is a type of superannuation fund that you manage yourself. This means you have the responsibility of making investment decisions and ensuring compliance with superannuation laws. Unlike traditional super funds, where a fund manager makes investment decisions, an SMSF gives you direct control over your retirement savings. This control can be empowering, but it also requires a significant amount of knowledge and commitment. Key benefits of an SMSF: control and flexibility. You can tailor your investment strategy to suit your personal circumstances and goals. This flexibility allows you to diversify your investments across a range of asset classes. As a trustee, you have the power to make investment decisions, choose your own investments, and potentially reduce your tax liability. This means you can invest in assets that you are familiar with and that align with your risk tolerance. Investment choice. SMSFs offer a wide range of investment options, including shares, property, and managed funds. You can also invest in collectibles, such as artwork and antiques, provided they meet certain conditions. Tax benefits. SMSFs can provide tax advantages, such as tax-deferred growth and potential capital gains tax concessions. These tax benefits can help you grow your retirement savings more effectively. And for estate planning, you can use your SMSF as a tool for estate planning, passing on wealth to future generations. This can be particularly beneficial if you have a large estate or complex family arrangements. You can nominate beneficiaries to receive your superannuation benefits in the event of your death. This can provide peace of mind, knowing that your loved ones will be taken care of. But hold up! While SMSFs offer significant benefits, they also come with responsibilities and risks. There's an administrative burden, investment risk, legal and tax complexity, and cost. Managing an SMSF requires a significant time commitment and a good understanding of financial and legal matters. You need to keep detailed records, prepare financial statements, and arrange for an annual audit. Failure to comply with these requirements can result in penalties and fines. Establishing and maintaining an SMSF can be costly, including fees for accounting, auditing, and legal advice. These costs can add up and may outweigh the benefits if your SMSF balance is relatively small. So, think carefully. Weigh the pros and cons, consider your financial situation and risk tolerance, and consult a financial advisor. It's important to make an informed decision and ensure that an SMSF is the right choice for you. Ready to learn more? Stay tuned for our next video on setting up an SMSF. We'll guide you through the process step by step, from establishing your fund to selecting investments and meeting compliance requirements. Setting up an SMSF involves several steps. First, you need to decide on the structure of your fund. An SMSF can have up to 4 members, and all members must be trustees or directors of the corporate trustee. Next, you need to create a trust deed, which outlines the rules and regulations for operating your SMSF. This document is crucial as it sets out the powers and duties of the trustees and the rights of the members. You also need to apply for an Australian Business Number, ABN, and a Tax File Number, TFN, for your SMSF. These are required for tax and regulatory purposes. Once your SMSF is established, you need to set up a bank account in the name of the fund. This account will be used to manage the fund's transactions, including contributions, investment income, and expenses. You also need to develop an investment strategy that outlines how you plan to achieve your retirement goals. This strategy should take into account your risk tolerance, investment timeframe, and the needs of the fund's members. It's important to review and update your investment strategy regularly to ensure it remains appropriate for your circumstances. This can help you stay on track to achieve your retirement goals. In addition to managing your investments, you need to ensure your SMSF complies with superannuation laws and regulations. This includes meeting contribution and benefit payment rules, and ensuring the fund is maintained for the sole purpose of providing retirement benefits. You also need to arrange for an annual audit of your SMSF. This involves engaging an approved SMSF auditor to review the fund's financial statements and compliance with superannuation laws. The audit process can be complex and time-consuming. but it's a crucial part of maintaining the integrity of your SMSF. It helps ensure the fund is operating correctly and meeting its legal obligations. Another important aspect of managing an SMSF is keeping detailed records. This includes records of all transactions, financial statements, and minutes of trustee meetings. These records must be kept for at least 5 years. Good record keeping is essential for managing your SMSF effectively and ensuring compliance with superannuation laws. It can also help you track the performance of your investments and make informed decisions. In addition to the administrative and compliance requirements, you need to be aware of the risks associated with managing an SMSF. These include investment risk, market volatility, and the potential for fraud or theft. It's important to have a risk management strategy in place to protect your retirement savings. This can include diversifying your investments, regularly reviewing your investment strategy, and seeking professional advice when needed. Another risk to consider is the potential for disputes between members. As all members are also trustees, disagreements can arise over investment decisions and the management of the fund. It's important to have clear communication and a formal dispute resolution process in place to manage any conflicts that may arise. This can help ensure the smooth operation of your SMSF and protect the interests of all members. In summary, managing an SMSF can be rewarding, but it requires a significant commitment of time and effort. It's important to be well informed and seek professional advice to ensure you meet your obligations and achieve your retirement goals. If you're considering setting up an SMSF, take the time to understand the responsibilities and risks involved. Make sure you have the knowledge and resources to manage the fund effectively. And remember, an SMSF is not for everyone. It's important to weigh the pros and cons and consider whether it's the right choice for your financial situation and retirement goals. Ready to take the next step? Stay tuned for our next video on setting up an SMSF. We'll guide you through the process step by step, from establishing your fund to selecting investments and meeting compliance requirements. Thank you for watching. We hope this video has provided you with a comprehensive overview of SMSFs and the responsibilities involved in managing one. If you have any questions, please consult a financial advisor or visit our website for more information. Stay tuned for more videos in our series on SMSFs. We'll cover topics such as investment strategies, compliance requirements, and tips for managing your SMSF effectively. Until next time, take care and happy investing.